does gold beat the S&P 500 in a head-to-head race? Well, right now we're looking at the big economic uncertainty going forward with the tariff war between the United States and Canada and multiple other countries around the world. Now, it's led me to looking into the data between the investment behind gold bullion and the S&P 500. How do they really compare? What type of investments are they? And at the end of the day, which one seems to be the better investment? Okay, so let's get straight into the nitty-gritty of today's episode. Gold versus the S&P 500. We know that both of these investment vehicles are level, or also known as level 1 or tier 1 investment vehicles. But how do they really compare against each other? Well, given the certain economic uncertainty in the markets right now regarding the tariff wars, specifically between the United States of America and Canada, we've seen some differences between the price of gold and the investment trajectory of the S&P 500. Going forward, how do we see them appearing? How do they compare versus each other? And what's the better investment? Well, both are long-term investments. Let's not get shrouded any mystery with that. We know that gold is a long-term investment to hedge against inflation and preserve your wealth, and we know that the S&P 500 is traditionally used as a long-term low-risk investment to build compound wealth on a normally reinvestment strategy, although you can take dividends from it. Now, if we look at gold over the last 10 years, we can see that gold has increased in value by 169.41%. That's an increase of £1,311.78 per ounce. When we look at the S&P 500, we can see that it's increased by 192.2%. That's an increase on gold of 22.8% in a positive yield. Now, how does that compare if we invested a figure as an example? Well, let's take £10,000 or dollars as an example. How would that investment period of yield from the last 10 years look if you use £10,000 or $10,000? Well, over the last 10 years, if you had invested £10,000 into gold bullion, you would have a yield of £26,940. That's an increase of £16,940 on your investment in gold bullion. Whereas if you invested that same £10,000 into the S&P 500 10 years ago, you would have a yield representing £29,220. That's a positive increase on gold, again, of £2,280. Now, of course, these are two very different investment vehicles, but the figures don't lie. Investing the same amount in the S&P 500 versus gold would yield you greater results. Now, both examples, I have to say, would be tax-free, providing that you invested gold bullion in legal tender gold. That would be something like sovereigns or Britannias here in the United Kingdom, or if you're in Texas, you don't have to pay tax on any of your gold. And if you invested in the S&P 500, of course, you would want to put it into an investment ISA, allowing you to invest up to £20,000 per tax year. That would work out at an investment value per month of £1,666 per month. Now, we've gone through some of the figures, the facts behind gold and the S&P 500 over the last 10 years. We can see that if you're looking to gain more capital over the last 10 years at least, it would have been more beneficial to put that into the S&P 500. Now, there are some valid points to mention, of course. We have worked out these yields from gold specifically off of the spot price. So in fact, gold's yield would actually be lower because generically you pay premiums over spot price when buying gold. So therefore, this would actually affect the true yield on gold even more so. This is, of course, not even to mention the fact that when you sell your gold, you may not even be able to get the spot price value back. So going by the fact that I've just worked this out off of the spot price alone, and then you have to include the factors of premiums and selling it again, the yield could possibly be even slightly lower. Whereas the S&P 500 has no purchasing fee. However, the SEC, the Securities of Exchange Commission, do charge a selling fee, which is about 0.0008%. So that is a fraction of what it is when comparing it to gold's premiums. Now, in conclusion, we know that both are completely different investment vehicles. Going to gold, we know that it's a hedge against inflation. It's a device to protect and preserve your wealth. Gold is often seen as not something that particularly makes you rich, but it certainly keeps you rich. Whereas the S&P 500 is more of a wealth building tool. It's a compound investment vehicle that can create great wealth over a long period of time. So it is a little bit biased and a little bit unfair to hamper on that gold is the lower returning investment, because they are two separate investment vehicles. They have different purposes. In my opinion, gold is the security behind your portfolio. It's the backbone behind your portfolio, whereas something like index funds, maybe the S&P 500 or the FTSE 100, are investment vehicles that are generating you compound wealth through interest. So yes, they are very different and they have different goals and purposes. That's why we invest in them. But going back to the facts, I have to say that if you're looking to invest £10,000 to get the biggest positive yield, going by this data, it would be the S&P 500 being the more positive yielding asset. Nonetheless, I think it's extremely important to have both of these investment vehicles in your portfolio. They make up a fantastic diversified portfolio, really spreading your risk and also spreading your chance of yielding greater results. However, if we look at the facts and we go by the data, the simple fact is, from a 10-year yield, the S&P 500 wins. Let me know what you thought about this video in the comments section below. Did you enjoy it? Would you like to see more comparison videos like this? And what do you prefer? Do you prefer investing in gold bullion or the S&P 500? Let me know. I'd really like to see. Thanks for watching, and I look forward to seeing all of you in the very next episode. Bye-bye.